stopped out on pound dollar. But again, it's just going back to the central bank divergence, playing the statistics of pivot points, and some light economics behind that one. Chris Pulver, good morning, everyone. Good morning, Chris. Let me just check the time, actually. Need to make sure. Okay, Chris is coming on in a minute, guys. So let's just have a quick look on the currencies before I head off. So the dollar is still maintaining the sort of 100 level. I've had this level drawn out for a while because it's quite a significant one, really. If we look on the weekly, it was rejected here, failed to break above, failed to hold above here, failed to hold above again, then was resistance, and finally broke above and was used as support. So now looking whether the dollar can break below and hold below, that'll be quite interesting to see. And if we can, that would be a signal to me to maybe start looking to get into some more long-term dollar shorts. The yen, again, wouldn't surprise me if we could reach 70.9. We did previously, again, before we had the hawkish Bank of Japan, the dovish Bank of Japan, and then rejected quite quickly. But yeah, looking really to see if we can start breaking previous highs. The pound index is moving quite nicely to the upside. It's quite smooth. So yeah, the overall markets look quite simple, especially now we've got quite heavy pullbacks on some of the commodities. As long as we can see the overall trends continue, it should be smooth sailing, really. So guys, I'm going to head off. It seems like Chris is here, so I'll let him take over. I hope you all have a great day. Hope you all enjoyed your weekends as well. I'll see you all very soon, and thanks for watching. Don't leave. Got Chris on the way.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Monday. Welcome back to the session here with A1 Trading. It's 10:15 on the 30th. Happy end of month, happy end of quarter. What you are looking at here, this is ES trade that we have. This is an E-mini futures S&P. I put on a broken wing butterfly. It's in the Discord channel for my Pulver alerts. We're sitting here nearly up full profit. If I took the trade off right now, if I get filled at the mid price, it's about 10 to 15 cents. I took the trade for a 275 credit. If I walk out of here with 265 out of 275, I've got about a 96% profit right now. No shame in taking that. All I'm going to do is probably manage this for later in the day. And the reason why is I can take the profit now and walk away with my 265, and that's still a great trade. There is a chance that I could turn this into maybe from a 265, if I could turn this into maybe another, let's say 30 to 50 cents bonus credit if we get into this profit trap later in the day by, let's say, 2 p.m. today, 3 p.m. today. So if price comes a little bit up on the day, this might end up trading for a credit. So I can take the trade with the credit, close the trade out with credit, give me a net position that's slightly bigger. I'm going to keep the trade open, but I will update. Let's see here in Discord, go to the Pulver alert section. So in my Chris's trade, this will be under the futures trade. We had an ES trade close for profit. The 931's close. Okay, here we go. So I'm going to update this one. This will be a edit message update during live session Monday. This trade is great for 0.05 to 0.15 debit to close for 95% profit now. And I'll update that message and I'll reply to it as well, because I'm going to keep it going a little bit longer. So reply to this message. This is a ES trade for 9:30 expiration. Update. Trade is showing 0.05 to 0.15 debit. for a 95% profit target. I'm going to monitor and manage for end of day profits to see if the profit trap will offer additional credit late in the day. Look for final update this afternoon. But if you want to close now, great trade for the majority profit. Okay, so that's updated on ES. China stocks still doing their thing. If you were paying attention to any of that last week, we talked a lot about it. Had some exposure on Alibaba. We are getting a pullback, which I'm totally fine with. We put in a 110 by 105. I'm still good with just hanging on to this. Let me check and see if there's any. I don't think we'd have like an immediate decay on the trade. I'm not that worried about it. It was essentially an at the money trade. So if I go Alibaba here, let's just go this account, Alibaba. There's my 110 by 105. So collected 260 on the trade last week, and it's trading for 245. Not enough of a profit target to me to say I'm going to close the trade out. I don't mind taking on more shares of Alibaba. I'm only in the credit spread here. I'm holding shares of Baidu in my managed accounts. I've got both. So I have shares of Alibaba along with a bunch of other trades. And then Baidu, I have shares along with a bunch of other trades. So, there's $9,600 in Baidu. There's $12,300 in Alibaba. So I'm still going to let those run a little bit. I'm actually happy to see a bit of a pullback. My gosh, we had this thing on the daily time frame, and looking left on the chart, by the way, let's just go through a couple of these stocks. If I'm not really looking to take off any trades on Alibaba or Baidu until these measure moves are hit. So if we get back into this, 121 level, maybe we'll start having a conversation around protecting some profit. I wouldn't mind seeing price if we get some type of pullback. This runs up here. Let's say we have a pullback. I said this last week, a bull flag would be a great thing to look for, just to show that the bulls and the buyers are still very much in control and interested in taking this up higher. Does that make sense? So a bull flag would be awesome on Alibaba. If we get a pullback, I'm hoping the pullback doesn't look like this giant red candle. So let's just hypothetically say for the weekly candle that we are up for the week, like you see here. That's one of the biggest weekly candles you've seen in a long time. The last time we had that type of move would have been maybe early of 2023. That was a pretty decisive candle that obviously all of that was taken back. So as long as we don't see this big rip up and then a big fat sell-off candle to neutralize it, I just want to see if price will stay here. Bull flag would be pretty good. And then we watch our measure moves towards 121. I've got symmetry measured up towards 130. I have some gap fills in some pockets as well, some inefficiencies back around 160. And then a final symmetry if we have a wave, wave 5. If this is a wave 1, all this is wave 2. We're pushing for a wave 3, pulling back again, trying to push for a wave 5. Anything from 130 to 185 would be great. And I'm happy with that. Okay. All right. So that's Alibaba. Baidu, same thing. 110 by 105 credit spread. Let me put on at least a measured move right here. So that level's around 157. We're trading at 110. I do like the upside potential. Just dollar per share. If I could get a, $30, $40, $50 move to the upside on Baidu, that'd be freaking sweet. So I do like Baidu for that. The other ones that I have, we have some FXI, which is also pulling back after last week, but did a 31 by 30, did a 30-50 by 30. We're trading at 32.50 right now. I'm still long. This measure move is up to around 33. Hopefully we are going to see this break. If this is a double bottom and we break this center high, I'd like to see FXI continue to go higher. That is the measured move right there towards 46. That's a big upside, by the way. Okay, for large cap China, for large ETF, that's a big move percentage wise. I don't know if we're going to get that move. I hope that we can, but I'll keep an eye on this one just in case we have a rejection. And, if we don't hit higher highs, then there's a halfway point in this range. And obviously this could be resistance, support. And if we reject off that, we come back to the halfway point. We neutralize this candle from last week. Halfway point maybe offers a bounce, maybe a range trade. That's kind of worst case scenario. Otherwise, it's pushing up, and a little bit of a pause goes a long way for a bull flag. And then we look at fresh breakouts, and we're not chasing, but we are expecting to see this move continue to go higher. Okay, the other one that I'm in, some K-Web, 35.56, back up towards measured move highs. I like this trade if we just put a measured move here. So from low to high. Let's see if we can get a move into like the 18127. Some previous structure. This isn't too bad. Up into these like high 30s. High 30s are $40. I'd be pretty happy taking some profit on K-Web. If we get a 5-wave move, this is 1. All this is 2. We're still kind of pushing through wave 3. And then one more wave 5. Wherever that finishes, somewhere in this kind of cluster of price between like $45 and $50, I'd be pretty happy. There's also a lot of inefficiency right in here. But that's wishful thinking that this is just going to melt up. My timeline on this China stuff is probably going to be like 1 to 3 months. So whatever type of gains I can see in the next 1 to 3 months, pretty happy with taking some profit on China. That's about the exposure that I wanted. Now I say that like, if you think about this is what's crazy about trading, being an investor. I've been sitting in this trades for over a year and thinking about potentially getting paid to my profit targets and my measured moves within 1 to 3 months. It's kind of wild, but if that's what the market's given me and that's what it's offering me, I'll take the profit. I'm not sitting here trying to be like long-term when the reality is if my measured moves are getting hit, I'm going to take profit. So it's, obviously taking a lot of patience to get to this point, but the fact that the market is cooperating, I'm just trying to stay out of the way and make sure I can hit the profit targets that I'm looking at. Okay. All right. So that's pretty much it from that side. I think JD was the other one that was ripping to the upside. I bought some shares around 32.50. We're up to 41 and change. I think, again, a pullback is fine. A measured move is fine. A bull flag would be great. I'm going to keep an eye on this one. JD is sitting up around $11,800. So decent chunk of profit. Have some shares, have some credit spreads, have some puts, have some whatever. A lot of stuff. So I'm just going to let these things play out. 1 to 3 months is my expectation. If they keep going higher, I'm not trying to roll and trying to go further out. It's like I'm pretty good in this like end of the year window. So by the end of the year, I'm pretty much closing things up on China. We'll assess and see where the U.S. is at. I had an interesting stat today. Let me show the screenshot here. I shared this morning in one of my live sessions. Give me a second here. So this guy. So the S&P election year. There's a lot of stuff out there that's being sprinkled around. It's like it matters. I mean, this is 1949 to 2022. So if there's anything that gives us some history, I'm all for it, right? So all election years, and we said this going into this year. If you were, with A1 trading all last year, with this at all this year, we know it's an election year. Obviously, there's already been some election drama with Joe Biden dropping out, Kamala Harris getting nominated without actually going through a primary, Trump coming back after however many lawsuits the guy's dealt with and nothing stuck to him, and now he's running for president, whatever. All election years are here in black, okay, expecting to be positive on the year. The cycle, especially seasonality-wise, look at this October, November. Everybody see that right there? October to November, as we head into the election, even in the election years that are positive, usually there's a little bit of chop prior to the election. So does that mean we have to have a down move? No, it doesn't mean that, but it would make sense over, a 72-year pattern that the market probably has this for a reason, because there's some indecision going into the election. We know that there's more to it than just the election. We're in an interesting spot with the Fed. They just cut rates 50 basis points. They're likely going to cut another 25 by the end of the year. So the Fed's looking at a pretty aggressive 1% cut roughly by the end of the year. with an election, right? With earnings season, with employment news that the market's going to be sensitive to, with inflation data the market's going to be sensitive to. So is this always the same? And having this, I'm super confident this is going to be what's the year plays out to be. Not really. There's a lot of other factors that build into what is the market going to do at the end of the year. Is it going to be higher or lower? I would imagine that if the market can, tolerate and digest good employment news that we'll see this week. So we have non-farm payroll this week, right? On Friday. So Friday's non-farm. This week we do have some PMI numbers coming out of the U.S. So Powell's due to speak this afternoon at 2:00. Tuesday we have Eurozone CPI. We have ISM. What's the manufacturing PMI numbers coming out of the U.S.? We have job openings as well for the U.S. at 10 a.m. Tuesday. Wednesday, ADP is a non-farm payroll precursor to Friday. So forecasting 124. Last one was what was the forecast? So 144 was the previous forecast, came in 99. Not ADP has never been like a big. It's never been a big. I'm never like trading ADP non-farm on Wednesday. It's interesting to see what the print is. Is it higher or lower than expected? But Friday is the big one. So light data this week outside of the PMI numbers. If there's going to be any type of reaction, that's at 10 a.m. tomorrow. And then Thursday we have unemployment claims, which will continue to be a sensitive spot, making sure that our unemployment claims are staying relatively quiet, okay, or calm or consistent as opposed to spiking higher, trending higher. And then non-farm payroll on Friday. Average hourly earnings expected to be 0.3, non-farm expected to be 44, and unemployment rate, which is probably what the market's more sensitive to, will it be lower? So we peaked that August non-farm print peaked at 4.3. That's what activated the SOM rule. Again, historically accurate rate cut cycles. I mean, all these things. It's like there's a reality check that the market's going to have to deal with. You can call it a recession, but it's probably going to be something else. And the reason why is too many people right now are in the recession band camp or the bandwagon, that if everybody expects it, it's going to be something else. Like the market is very good at misdirection. Everyone thinks one way, the market does the opposite, right? If everyone thinks it should be a bearish market or should be a recession and everyone's positioning for it, what's the pain trade? A melt up, right? A melt up. So I wouldn't be surprised if the market finds a way to melt up and ignore what we think is fundamentally going to rattle the markets. But here's where the market's going to be moving. Okay, look, U.S. employment has to be steady. Okay, so let's chat about this for a second. Priced to perfection. Historically, when you go back to 2020 valuations, 2007, 2008 valuations, 1999, 2000, 2001 valuations, we're not quite overextended at those levels, but we're pretty darn close to them. Okay, so we need to see employment data has to be steady. The market probably doesn't want to see higher unemployment rate, doesn't want to see a miss in average hourly earnings, doesn't want to see a miss in a disappointing non-farm number come out. The market right now wants to see good news is the U.S. economy, job-wise, we're steady, we're stable. U.S. economy, we're still growing, right? It has to be steady. So I'm sure the markets don't want to see any bad surprises with the U.S. right now. Let's talk U.S. inflation. Has to continue to trend lower. This is the concern that I think everybody should be watching through like Q1, Q2 of next year. There's a lot this market can ignore for the next 3 to 4 months. We have an election. We're going to figure out what that looks like. Is it more of the same? Is it going to be a crazy sweep with one side or the other? That's the only thing I'm really concerned with as an election, is if it's all Republicans taking over everything, or is it all Democrats taking over everything? I don't know. That's the only real thing I would think would be disruptive to the markets. If it's more gridlock where, it's divided House, Senate, nobody wins, branches are all checks and balances, it gets passed, right? We know that pretty much Democrats, Republicans right now in the U.S. hate each other. It's a super polarized system, and you toe the party line. You never go bipartisan unless it's like military, and that's what our country is right now. So is it good or bad? I don't know, but the markets tend to like gridlock. So if gridlock is available, then the market's probably going to continue to do what it does, which is find a way to go higher. But inflation, if we are adding money supply, so the US money supply has gone up, China money supply has gone up, global money supply going up, that liquidity will find its way into the markets, probably causing more of a melt up. And you could argue that that melt up is going to equal some type of asset bubble, some type of deficit bubble, some type of debt bubble eventually. Could be in the near term future. We don't know. But inflation data has been trending lower. You know, we had a peak in 2023. When was our peak inflation for CPI was that 2022, like 9+%? And we had about a year of stickiness around the 3% mark, and then we finally went to like 2.9, and then we printed 2.5 year-over-year CPI. I mean, inflation's been trending lower, but with global money supply, if it increases spending, that's likely going to be inflationary. So I still think the markets are going to struggle to see if asset prices go higher, inflation pressures go higher. I don't know if the Fed can get, or I don't know if we can see the CPI year over year get back to 2%. I wouldn't be surprised if what we see this month might be the lowest that we see in inflation for a while. Let's say we come close. When is inflation, by the way? So this week's in employment news. We kick off earnings season next week as well. So earnings season kicks off with the financials on the 7th. Cash rate for the RBNZ. Here we go. So Thursday, October 10th is going to be CPI year over year. There's no forecast right now. Previous print was 2.5. I wouldn't be surprised if we forecast and we're printing lower. If I go to, let me go to Trueflation for a second. What's the trend here? Right now, if I just go to inflation index. Okay. All right. And again, this is a third party reading. So Trueflation 1.5%. Previous print was 2.5. But what I want you to notice here is look what this is. What is that right there? That's not trending lower. We just went from this big trend lower to then bouncing here in the last 2 weeks. So I could see the CPI reading coming in lower than 2.5. The market gets all excited about it. But the reality is we might have actually put in the bottom, and all of a sudden our inflation is going to be right here, and it's going to remain sticky. But I don't think the market's going to care necessarily until we get through this year, maybe into Q1, Q2 next year. And then the market realizes, hey, wait a minute. This inflation report that we're seeing every month, year over year reading is not getting better. It's not closer to 2%. The Fed keeps talking about 2%. And I do wonder as we go into next year, like, will the Fed continue to cut crazy aggressive like the market thinks it's going to, or would that be a backpedal in 2025? So am I worried about it right now? No. I think that the market will continue to see, better data and favorable data. As long as we don't lose our butts on the employment side, then I think the U.S. market's going to continue to hum along just fine. Okay, but price to perfection, a lot of things are happening here. Employment data has to be steady and solid. Inflation data has to continue to be steady or lower. And I would say that earnings, okay, so U.S. earnings has to continue to, I would say, beat expectations and likely have positive forward guidance. That is the one concern that I have going into this year's earning, or this season's earnings, is if there's acknowledgement of a tightening consumer, or there's acknowledgement of a slowdown, it'll be interesting to see what the overall consensus is. Okay, so and on top of that, we have U.S. election drama, which we know we're going to have it. This week, I think we have the vice presidential debate on Tuesday night. I don't think that's a market mover, but I don't think it will be. But there's obviously, as we get closer and closer, there's more uncertainty. Who the heck knows? Is one side doing some type of crazy Hail Mary thing? I don't know. But there's going to be all these things, right? So this is a lot for the market to be digesting. This is a lot of potential chop and volatility. Once we get through the election, I think the market will look at all these things and say, is it positive? If so, let's go. Okay. If we get through the election and all this is mixed, right, like a plus minus, maybe the market's a little bit drifting higher, maybe melting up a little bit, but not as fast paced. Or if this is all negative and we get through the election, maybe the market doesn't like it. I would say that if I'm forecasting here, my higher probability is the market's going to find a way to be higher. We're already trading near. I mean, we're at all-time highs, right? We had several all-time highs already hit on the indexes. This is a weekly chart. Let me go back to the daily. I want to say the SPY has crossed over 40 all-time highs this year, which is pretty darn good. Our last high we would have seen on Thursday last week. So Thursday all-time high. Before that, it was the Thursday after FOMC. So we had FOMC right in here with that rejection candle. And then Thursday was a massive gap to the upside. So that was our previous all-time high. And then last week as well. I wouldn't mind seeing some volatility to the downside. In fact, I may look at a short-term hedge. Let me see. Let me look at like an ES or I'm either gonna go ES or MES for micro, but I'm probably gonna put on a bit of a hedge. Let me see if I can get back down to like 561 on the SPY. Does that actually, this might be pretty cheap. Let me go to like a 561 put on the SPY. So if I go SPY 561, how much further out do I want to go? I'd like to get through the election. Probably November 15th. It's a good monthly expiration. There should be plenty of volume there. If I wanted to hedge out through November 15th through the election, any type of drama, and if this is something I can take profit on earlier, I'm fine with that. Right now, oh my gosh, dude, $8 for a put. I'm not taking that trade. What's up? The put premiums are really, really expensive. That's a 37 delta for $8. If I did a 37 delta on the call side, I guess it's about the same. Wow. That's just way more expensive than I thought. So let me try something else. If I'm looking at this FOMC low, that's around 561. Let me change this over to the futures feed. I like this gap. This one today, this is going to be a small loss. This is an ES trade. It's going to be a small loss. So that one's done. I've got the butterfly that I'll be managing today. I'm going to look at something. So that's FOMC with lows around 56.76. Maybe a gap fill towards like 56. Let me see what that's going to cost me. So if I'm going to go MES for micro and put in, let's go 56.70 in a couple notable levels. 56.70 and a gap fill around like 56.50 or 57. Nope, that's not right. 56. So 56.80. Sorry, my numbers are all messed up. 56.80 would be coming back to hit this FOMC low. If we have a gap fill here, I'd say 56.50. I'm going to look at stacking a couple of long puts on the, this is the micro E-mini futures. And so if I place a long put here and a long put here, all I'm going to look to see if price is going to fall into that gap, these should be valuable. If I give it enough time, I'm probably going to buy it out through November 15th. Let's see what this costs me. It's not super long in the hedge, but let's find out. So let me go /MES here. I want to make sure I do have a couple of hedges already, but let me double check. So here's January, here's February. So I've got some hedges on there. I've got upside and downside on those hedges. Up about $4,500 on micro ES, and then micro Nasdaq. This one is currently all hedged to the downside. All right, so I think I'm okay there. I'll double check that level, but let me go MES. I'm going to put in another trade through November. So MES trade November 15th. All right, so what's this going to cost me? If I do a 56.80, I'll probably go a couple strikes. I'll stack them up. 56.80. 56.80 if I buy that strike. Max risk about $450 with unlimited profit potential. I'm not going to set this up as a vertical or a debit spread. I'm just going to take it as a long put only. So that way, if I do have some gamma strikes or gamma pressures going my way, this can increase in value pretty nicely. So 56.80, 56.70. I'll put in about a 0.4% hedge. And I can roughly calculate based on the deltas here. If this becomes let's say this gets to at the money, that'd be a 50 delta. Let me see what this would do. So if I have a movement, I've got to do some math here, but this should be an easy way to figure it out. So if we go from 58.40 down to 56.80, that's a 160 point move at a 36 delta. I should be able to add about $57 of credit to these trades. Should be able to. So if I go $57 here, $57 here, that's $100 with a multiplier of 5. That's $500 profit. So if I take these two trades together, that'd be a 56.80 and a 56.70. I'm risking about $800. If I'm dead wrong and price goes higher, then I'm going to risk that, and that's going to be a calculated risk on the hedge side. If we get some volatility where price actually comes back down here, my goal is to turn, let's see, this would be about a 90 and 87.50 debit into probably that'd be what? That's $170, about $177.50 in debit. If I can turn that into like a 250 or better credit. Okay. So I'm looking at that. So I'm going to price this in. So 56.80 by 56.70 looks like we're trading for about 176. I don't want to sell. I'd like to, but then if I sell it, all of a sudden I'm on the hook for waiting until November 15th, as opposed to just putting on the long puts right now. If price were to drop into this gap, okay, or price were to drop in any way, shape, or form into some type of corrective move, like we had this August 5th low, even something like that. If we drop back down into this trend line, or we come down and find the 200 exponential moving average on like every S&P chart right now, a correction would be great. And so I'll take that calculated move right here on MES and see what I can get for it. So 176.50. This is going to be a calculated risk. Let's go out. Let's see, 175. Let me see what. So let me go. Let's see if I can get an improvement off the ask prices. So 89.50 plus 86.50. So 176 would be my ask price. Anything below that would be fine. Let's see if I get 175. 175. Okay. So that's pending. Let's go 175.25. Not filling. Okay, let's try to get 175.50. Come on, man. All right, let me see what the ask price is. 176 is the ask price. Filled at 175.75. All right. So I'm going to place this in all my accounts here as a little bit of a hedge. Filled. Okay. 176. 176. All right. Filled there. Okay, good. A couple more accounts. All right, that last one did not fill. 176. Let's go 25. Okay. And this one there. All right. So those are in. I'm going to add this into the Chris's trades in Discord. This is a futures trade section. So this will be new trade / MES 11/15 expiration. So it's a buy the 56.70 put So buying the 56.80 put and buy the 56.70 put, 176 debit. All right, so what that trade looks like is this. My max risk is $881.25. Max profit is unlimited, but obviously there's going to be a potential profit target. Unlimited profit because I'm not selling anything against it. Looking for MES price to hit 56.70 or lower, and I'll be happy with a, let's say, $250 to $300 credit to close for hedge profit. This is a 0.25 to 0.50% hedge on the index to weather any type of downward pressure or volatility pullbacks in the index and the US indexes. All right, so let me post this chart here. I can plot that guy at, let's go 80. Coordinates will be 56.80. And then put this one at 56.70. That's really close together, obviously. So 80 and 70. So long put, long put. All I need price to do, if I take a screenshot of this, if price were to come down, let's say into that gap area, either this level or even a little bit lower, something along those lines, and look to see if price tests. Okay, so that'll be my screenshot for the alert. And I am in. Okay, so trade is in. And look, I'm not saying that we can't go higher. We might still be able to melt up higher. Getting to that 6,000 handle, if SPX melts up to 6,000 before we have any meaningful correction, that could happen. But I'm just trying to fend off if we have some indecision here. And what I look for is if we have an aggressive, let's say over the next, the first week of October, as an example, let's say we have like a nasty start to the month of October. If that were to come back down and retest this FOMC low, I'm probably looking to close out that MES trade for profit. Okay. Now, if it gets worse than that, I don't know if I just move a stop loss to break even or better and see if it's better. But if we have a big sell-off candle with a little bit of follow through, I think that's good enough to take some profit because I'm clearly paying for a little bit of time in the trade. I'm letting it trade out through the election. Okay. So any type of disappointment in employment, disappointment in inflation, election drama, or we have some other outlier risk like geopolitical stuff, Middle East stuff, who knows? But I'm just going to do a little bit of a shield to the downside. But I'm trading that through MES. On my MNQ chart, I have this one also out to November. I'm looking at the same type of thing here. If the market is going to maybe be sideways like this, I mean, it does look like we're trying to force some type of trade on the Nasdaq. I mean, we could have this high to low. Price just spends all this time pulling back in here, and then, man, that's a big resistance point where we could have a big old failure on the Nasdaq and have a range. Who knows? I don't know. I might have just seen something kind of new there. But I'm hedged out on this one already. I've got an 18,000 long put. I'm looking to see if I can kind of double that up for profit. So if there's any election drama, anything that causes the market to spin downwards, I'm hedged out with some futures trades. Okay. All right. Elsewhere, index wise, let's take a look at everything. Everyone wants to talk about gold, silver. The Dow, the little boring Dow that's making all-time highs. The Russell is actually up today. So look at the difference. SPY's down. It's flat, 0.02%. Qs are down 0.2%. Dow is flat, 0.10 or 10 or 12. Russell's actually up 3/4 or 1/3, 0.35. Again, does this mean the Russell's going to outperform? Not necessarily. I still think there's ranges from, FOMC to post FOMC. The market's still trying to figure out and justify, can it go higher or lower? Okay. Volatility index 16.94. We have a bit of a heightened volatility. We're above 15. We're below 20. It's not scary volatility. The market's not dumping because of it, but it is certainly elevated. I'm curious what if Frank's doing anything with volatility. I mean, I'm looking to get long volatility. If price were to come back down into these lows, I'd get long volatility. If price is up into the 30s, I'd get short volatility. But I wouldn't be surprised if we have another event or some type of, let's say a correction where volatility gets back into the 20s and we just see a little bit of elevated volatility over the next maybe 30 to 45 days. Does that mean I want to be long volatility? No, not really. I'm just making sure that I'm hedged elsewhere in the market. Okay, so just keep an eye on volatility. That affects your, day-to-day trading ranges, current vol, things like that. And obviously, if the volatility index goes up, we typically see the S&P cooperate to the downside. So that's the correlation. They're inversely correlated. Dollar index continues to be really indecisive. I don't like the dollar index. I can't be any more vocal about that. It's hard to trade. I'd rather trade dollar weakness elsewhere in holding assets long as opposed to trading currencies. I don't think this is a good spot to be trading the dollar. I think this is going to be just a chop fest. And even with the news that we have this week or non-farm payroll, it's like, I don't know if the dollar is going to really do anything that we want to see directionally. I think it's going to go down a little bit more and to, tap all these levels for stop losses to get hunted. And then it's going to rip up here, but not have any follow through. Just be really careful on the dollar as a Forex trader. I think it's a challenging index right now to trade. Oil, we had a bit of a scare last week with this talk of, Saudi Arabia is abandoning the $100 oil price. They're going after lower prices for market share. I'm sure that's a potentially scary thing because I think the U.S. and Saudi Arabia are probably the only two countries that could exist operating at like $40 barrels. Everybody else is, wanting to see 60, 65, 70, $80 barrels. And they're, if we're going to see prices drop, this key support level is right around $65. So it's wild to think that with all of the tensions in the Middle East, we don't have higher prices. With all the crazy net positionings to the downside with oil, I do think there's a potential squeeze up here to the upside. So I still remain a little bit bullish on oil. We do some credit spreads. I've got some other exposure, but I'm still looking at oil to maintain the support around the $60 to $65 zone. Natural gas continues to go higher. I missed the opportunity on natural gas. I was trying to get in here for like $1.75, $1.70. Never came back that low. I tried to retest these lows at $1.65. Never came back that low. I'm not long natural gas. I've said this. It looks like a head and shoulders trade in the works. Okay, and maybe it is, and maybe natural gas is the best trade ever, but I don't think it is. I'm looking to see. I hope this. I hope that we just have some type of wedge, and we see natural gas consolidate. Then I can reestablish some long positions and just stay out of the way with options. But if I don't get that chart and it goes higher, then I'm not chasing it. Gold, 2634. Interesting pullback on gold. Is anybody surprised? Please don't tell me that everyone bought here at the highs. Okay, we've been talking about this for weeks that we'd expect to see some type of correction in gold. It doesn't have to be a big one. Okay, we're talking as little as, let me change this one over to a 21. There. Okay, look, if all gold does is pull back to a 21 or 50 or 100, I'd love a pullback to get additional credit spreads in. Okay, so 21 is like the most aggressive moving average that I use. I'd love to see it pull back to the 50. Right now, that value is around, we'll say about 25, 25. 25, 25 if we look to see a bounce there. So I'd like to see a little bit of pressure to the downside on gold. I'd probably put in a credit spread right there, see if we go higher. Between the 50, the 100, and the 200, we haven't hit this for quite a while. It's over 200 bars stretched. So the last time we hit the 200 moving average was way back here in October of 2023, and we're extended about 247 bars. Now, the same is true on the SPY. Last time we hit the 200 EMA is way back here, and we're stretched out about 226 bars. So it doesn't mean we have to have this correction. This could extend into the high 200s. This could extend into 300 plus. But gold making the run that it has, it wouldn't be surprising to see just a moderate pullback. Okay, but I do think there's plenty of bid on gold. One thing that's also interesting is global money supply going up, gold tends to drift higher. Global money supply going up, risk appetite up, Bitcoin goes higher. Those correlations have been pretty strong. So we get a pullback. I'm looking to add some exposure. I'll probably trade GC for a futures trade and probably GLD for a pullback. Silver, hopefully this pullback is no more than just the structure that I show here on the chart. Resistance, resistance. We broke that. I'd like to see if silver just pulls back and bases, and then we have more upside coming on silver. Same type of thing. Look at how this, nice dynamic support was found. The 50, the 100, the 200. We pull back in this area, let the averages catch up, and see if that offers dynamic support, and then we can see for some higher highs, higher lows on silver. Okay. Crypto Tunnel says, so 26.50 is not possible. I'm in a bad short. I mean, do you have stop losses, dude? I mean, you can't sell the highs with no stop loss. Or if you're in a bad short, where the heck did you short it? If 26.50, I mean, 26.50 is totally possible. What are you talking about? 26.21. I mean, that's possible. I mean, look, I'm talking about a pullback towards 25.25. So, I mean, I'd love to see the pullback towards 25.25. That's 100 points lower. I wouldn't expect much more than that. If we get a pullback towards these moving averages, I wouldn't expect this crazy deep pullback. Even if we do, though, this is well supported. This is well supported. This moving average is also offering some really good dynamic support. So I'm just saying, if we get a pullback, I'm bullish. I'm bullish. I'm bullish. Doesn't matter what level it holds. I'm just going to be bullish and look to add a little bit of exposure to it. Gotcha. Okay, that's it. So that's gold. That's silver. Hopefully silver, like I said, just responds to kind of gathering here on the backside of the trend line. Bitcoin pulled back from the 66.5 levels to 63.7. Bitcoin still looks fairly promising on the daily chart. We're above the 200 exponential moving average, but that doesn't guarantee anything. I mean, it was below it and above it and below it and above it. One thing I have noticed here on Bitcoin is we are making what seems to be slightly higher highs, but we're still within the context of this larger structure, right? So if we have, market challenges the highs, but still pulls back. I mean, I wouldn't mind seeing this. I wouldn't mind getting some more add-on trades in the low 50s if I can get Bitcoin to come back in the low 50s. Otherwise, if it starts to take off to the upside, I mean, the one thing you'd be looking for here would be if we end up like melting up here, breaking above resistance, resistance, resistance. Any type of pullback you get would probably be a good time to be buying. Trendline break, bull flags, right? Once we get on the right-hand side of this channel, I would say Bitcoin is looking pretty encouraging to go north. The big milestone might be the 100K mark. Does that drag Ethereum with it? Remains to be seen. But we'll find out. Okay. All right. I think I can go for a few more minutes. So that's Bitcoin. Ethereum. Hopefully we cross over this 28.15 level. I've got a credit spread here on EETH. Copper, big pullback on copper. I might actually get that trade. I put a trade in on copper for March 2025. Let me debate this one. Let's go /HG. I don't think this filled yet, but let's find out. I've got a pending order at 0.025 credit. It's trading at 0.18, which isn't really that different from last week. Do I like this trade enough to take it? So basically what I was looking for is if we pull back on copper, to me, this looks pretty good for a pullback. Now, the question is, do I get filled at the price that I want? I'm willing to go kind of a 1-to-1, getting 625 reward for 625 risk. I'm letting price come back to me. I'm not just chasing. Obviously, you can see there's a pretty meaningful pullback off of today's candle on copper is pretty volatile. So if we settle back into this left structure, hopefully this trade gets filled. So I do like that trade. I'm going to keep that one pending for right now. Okay. Michelle says, can you look at gold short targets? I just did. 25.25 would be my first gold target. If I'm short on gold, I'm looking to see if this comes back to like 25.50 or 25.25. All I'm using is a daily time frame with a 50 exponential moving average. That to me is the one kind of dynamic support level I'd like to see in the near term. So that's my target on the higher time frame. Okay, anything with the Japanese yen? Choppy. How about the Nikkei? Wow, look at that. That's a big fake out on the Nikkei. I had some traders last week tell me that the Nikkei was down. I saw over the weekend that the Nikkei futures was down. So yeah, I mean we're just getting a lot of volatility here, right? Is it choppy right now? I mean, I think that the market for the Nikkei is going to have a heck of a time finding a way to break these highs or break these lows. Don't be surprised to see just a lot of volatility in here where it doesn't break these highs, all-time highs, by the way, doesn't break this August 5th low, and the Nikkei is just very challenging to trade. I don't mind taking longs on the Nikkei if we come down to the support levels, but in the middle of this, I'm not trading the Japanese yen or the Nikkei right now. Okay. Michael's asking pound dollar daily chart. Yeah, I'll take a look at it. Anything else? Nvidia back down to the middle. This son of a gun. I've got this trade out to October 4th, which is this Friday. I might end up taking a loss on Nvidia. I did have a profit on the Qs. I did have a profit on the, or a small profit on the SPY. It was like break even by 5 cents. Nvidia, I'm trading right back in the middle. This is annoying. I want to see some volatility out of Nvidia this week. I don't know if we're going to get it. Let me see what this one's trading for right now. Hopefully it's not down a ton. Oops, I don't need to go forward slash. Let's go Nvidia. So Nvidia right here. October 4th, 1, 2, 3, 4, and it's trading for 538. I'm down about $3 right now. So I could take the small loss in Nvidia, not worry about it. The expected move to the downside, 116, 117. Nope, that's not right either. Son of a gun. Well, I think the smart play. So I don't see us necessarily getting back to the high. If we crumble to the downside, maybe there's a chance I can get this trade to be profitable. But I think I don't know. Look at this. Nvidia, this is ridiculous. So talking about that daily chart, holy crap. Look at this 200 exponential moving average. We haven't touched this thing in 426 bars. I hate to say it, but I should be staying bearish on this thing. The question is, how can I get this trade to be bearish without paying an arm and a leg for it? I think what I might end up doing is if I exit this trade for a small $3 loss, and then I look to get in for a put that challenges that 200 exponential moving average, that might not be a bad play. I could probably do like a $100 put. Let me see. I think I'm going to close this trade out. Let me see if I can get like 545. All right, let me put in a 545 debit. I'm going to manage this trade out. If I have to go, guys, let me know. I'm not sure if I have a guest on afterwards. What I'm going to do here is I put in, it's basically a trade that was directionally neutral. I was looking for some volatility, even up here at 127.50. It was trading for like $9 and change. Obviously, in hindsight, break even would have been better, but I thought, yeah, we can maybe stretch up towards like the 129, 130. I didn't end up taking the profit. So I'm just a few dollars off of my center price. I've got some time premium left in the trade, but probably something I need to evaluate and make a decision on. I think it's better just to take the small loss and reposition. I do like Nvidia, at least in the, let's say, the next 45 to 60 days, trying to find a way to revisit this 200 exponential moving average. So, and maybe it's from like that high. But I think what I'm going to do is look at trading some out of the money puts and see if price just makes a move down towards that 200 exponential and hopefully land a couple of extra profits on that. So if I can take a $3 loss now, I can probably easily make up with that for maybe like a $5 to $7 to $10 credit if I can turn some long puts into some profit. Okay. Technical analysis, Fed cuts. How will you time the continuation? It's probably seasonality. I don't think the Fed is going to move the market nearly as much as the current news. Like we've got employment, inflation, earnings, and the election. That to me is a much bigger chunk of catalysts than the Fed. The Fed has already played its cards, right? The Fed has cut rates. The Fed is going to continue to cut rates. It's, I mean, it's there, and the market loves it. But the market still probably needs that little, like if the market is on a bike and it needs this extra news to like let go and let the market kind of go on its own and pedal by itself, it probably needs the training wheels right now are like all these things that need to come off. I think the market is kind of priced for perfection to see that we have to have stable employment news, we have to have stable inflation news. Earnings season can't disappoint, and the Fed will continue to cut through the end of the year. I think the Fed is going to like really be put into a corner like Q1, Q2 next year. If inflation data is not getting lower, I think all of a sudden the market's going to start sniffing out some trouble, because all of a sudden the Fed keeps talking about this 2% inflation rate, and we might never get there. Does that make sense? So anyway, all right. So what's left for my day? I'm gonna probably take off. I will take off this Nvidia trade, take the small loss. I do want to price out something right now though before I start exiting that trade. If I just price out, let's go through the election. We've got earnings season on the 19th. Oh, that sucks. I have to buy it to the 20th. I don't want to do that. Maybe before earnings season, could I see Nvidia down to like a 110? I don't know how expensive it's going to be. What's a 110 put? It's going to cost me $4. It's not the end of the world. I could do a 110 put. The value on my trade, if I get to the 200, we're trading under $100. If I did a 110 put, okay, a 110 put, and I'm long, and we get down to $100, let's say that's a $10 credit, and I pay about $4 for the debit. So I can get $6 of net profit. If it happens fast enough, this might actually increase and gain more in value. I don't know, but something along those lines. I'll debate whether I want to take that trade. 110's not bad. 109, I mean, maybe stacking up a couple. I might do like a 109, 108 and stack up just a couple of small ones and see if I can turn like a $7 debit into like a $10, $12, $15 credit. If that's the case, great. And obviously I'll make up for a little small, $3 loss that I would take on that kind of neutral direction. So, all right. I think I'll kind of wrap things up for my session for today. The one trade I'll be watching, as I mentioned earlier when it came to the session, I'm watching this futures trade to make sure. Oops, let me go 1, 2, 3 here. So this is live price where this little flag is at, oscillating. I want to make sure that if price is coming back into my profit trap, that I can turn this into a credit. Right now I've got about 275. I took $3 net credit last week on a 285. I got a little bonus there, and I've got a 275 for this one that I can take most of the profit right now. But if I can turn this into an extra, let's say 15, 20, 30 cents credit, obviously I'd like to do that and make a little net win there. Okay. So I'm going to keep the ES trade open. I will take off the Nvidia trade for a small loss. I'll probably stack up a couple of trades on Nvidia. The only thing I don't love about that trade on Nvidia is if I have to go out through November 15th and earnings on Nvidia is the 19th, I don't necessarily get to play the earnings move. Not that I want to be in front of Nvidia earnings if it's going to be good, especially. But we have Nvidia earnings on the 19th. Maybe that's not a bad thing. Maybe I just get through the election drama. If the market pulls back in any way, shape, or form, Nvidia will go. I mean, if the market pulls back as a whole, Nvidia is probably going with it. So maybe I don't need to trade earnings along with everything else. But I want to go out far enough that there's at least some volatility out there. And I'm not trying to be perfect on the timing. Get through employment, get through inflation, get through the election, and let kind of let the market do its thing. So hopefully that 400 and some bar overstretch on Nvidia is going to allow this thing to find the support that I'm looking for, And I also think that's a good opportunity to buy too. I mean, if we come down to that 200 EMA, there's probably going to be an active, algo driven, like, hey, just buy the dip. It's 200 moving average. It's a great historical reference for dynamic support. But I think we can get there in the interim to actually go there directionally. All right. And then the Fed stuff. Yeah, the Fed is going to be cutting rates. Question is, are they cutting 25 or 50? And we'll find out. So right now the market's anticipating a 25 basis points cut for November. That's 2 days after the election. And then the December one is another 25 to 50 basis points. So we are literally talking another 25 to 50 basis points by the end of the year, maybe even 50 to 75 basis points by the end of the year, which is a very aggressive rate cut considering, in 4 months the Fed is cut by 1%. That's a big deal. Does the market love it? Maybe. Probably. The market does. The market wants to love it. I think the only issue is underlying. If we see softer jobs numbers, I don't think the market's going to be all that excited about the Fed cutting rates, because that means they're cutting in the wake of softening labor, maybe a recession right around the corner, which, all these things have been talked about in the last, couple weeks. Okay. All right. Look, happy Monday. Enjoy the rest of the day, and we'll be back here tomorrow as usual. All right. Thanks, everybody. If you want to subscribe to my alerts and all that stuff, I know that there's been links posted in the chat. It's an active Discord. There's lots of stuff that we're all trading between Elvin, Frank, Nick, myself. So check those alerts out. You can add just my portion. You can add the whole team, and it's a great deal. So we're here to trade. We're here to help, and we'll see you then soon. All right, thanks everybody. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.